The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi folks, Basil Chapman, Tiger Technicians Hour, Monday through Friday, 11 o'clock till noon. 877-927-6648 is the number to call. And yes, very interesting. A lot of stuff going on. Let's go right to it. Well, thank you, Steve, for 2 great hours. We've got programming here right through the day. Stay tuned because this should be a very exciting session. There are things that I said to my subscribers that I typed up in my overview section, in my Dow section that I do every single day to my service, the opening call. And what I'd said, and we've been looking at this and trying to trade it for a few days now. What I'd said is that on the April the 4th, when the Dow hit 16,631, there was an immediate sharp down move that same day. That it made D, it confirmed D the following day with a very sharp move to the downside under the 9-period exponential moving average. Then there was a doji close, and that was the doji candle of let me see, yep, the 8th of April. And what I typed in was match with a question mark. Why? Because when we came down from the high of 16,735, made on the 13th of May. Let me just type that in so I know exactly, 5/13. What I said was, we're going to be watching this closely, because when we closed down on the 15th, I believe it was, on the 15th, so sharply, at 16,397 low, I said, if we're going to match, we must expect some kind of small candle now, and then a pop to the upside, and then we've got to see whether or not there's a sharp move to the downside, making it A to B equals C to D. So what I typed for my subscribers last night and sent this morning was that now we have the same look of that lightning rod. Will there be a test of the important 16,312 low of the 8th of April? Or are we looking at the NASDAQ and the momentum stocks ready for a really nice bounce? My conclusion was that we're looking for the bounce. We have been short the Dow. We're still short the Dow, still with a profit. I've tightened up the stop to make sure that we make a profit, that we don't lose that. But at the same time, we are long. We are along the queues, very long the queues in a particular ETF. And one of the reasons is, and now I've not up, just for the day, maybe even into early morning, I'm going to, just testing something, so I'm not live on my trade station on this particular platform. So I want to go to a couple of different things here. So what you're looking at here is that the Dow was down 137 points yesterday, and it felt terrible. It felt, oh man, everybody came out and said, this is the end of the world. Oh man, oh. I didn't see it that way. I thought to myself, no. The volatility index came back. It wasn't really, it didn't do very much, the VIX index. Imagine, yesterday we're down 170 points in the Dow, very sharply in the S&P, and then there's a retracement, and then we pull back right at the close, so we closed down about 137 points. Wait a minute. What's everyone saying right now? An hour and a half, not even 2 hours into the day, and we're up 144 at 16,518. The VIX is at 1219, down 77. The Russell index is up 4. The S&P is at 1884, up at 11, almost 12 points. The NASDAQ's up 23. You've got natural gas down a little bit. Brent crude is at 110.20. You've got gold down 4 at 12.90. Silver's up a 10 in 1941. What's with that? What's with that is that the platform that we've seen unfolding in the 16,300s and the resistance in the 16,500s to just over the 16,600s, that's really our measure. That's what we've got to focus on a lot. And in focusing on that, it allows us the freedom to say, treat each sector, treat each stock, treat each index differently. This is where you have to do your homework. And in order to benefit financially, if you get your mind locked in on something, or you're so paralyzed you just can't do anything, then you need to just be in cash right now. Just be in cash. There's nothing wrong with that. And if you're in cash, it means that you got a lot of money in the account that's tradable to start implementing as certain stocks, certain sectors, certain indexes, certain ETFs just come into focus. And then you might be able to say, hey, I'm buying it way down, 20%, 30% down from what it was, 40% in some cases. My risk is X percent or X number of points, but my reward could in fact be quite a bit more. And that's the only way to do it right now. And that's what we try to do in my opening call. So I'm going to go to these charts right now. Let me see if I'm going to pick out the correct ones right here. I'm going to show you the Qs needed leg D. What was leg D? Well, the 88.61 high, which was tested at 88.60, 1 penny lower, made a peak C1, C2. And what I said, we're going to see if this goes to leg D, because if it goes to leg D and certain stocks, like an Amazon, well, I didn't actually have time to write all that, but my thinking was like an Amazon, which is trading up a little bit here, it's up 3.20, or a Netflix trading way up, this is up 9 at 2.47. Hey, didn't we have, no, we had Amazon, I think it was, or was it Netflix? We had one of these just recently for a nice profit, but now look at it. You know, do you realize that Netflix is gone from, this is like a whole bull market, a whole brand new bull market in just weeks in May. Amazon's gone where, if I can find it, right here. Look, Amazon's gone from a low of $299.50 to today's high of, right there, today's high of $382. I mean, that's peak A, B, C, D, leg E, broken above that big pop-up we had in April. I'm impressed. I'm saying to myself, don't lock in. And I think that's one of the reasons why the volatility index is just so low. It's not rallying. The volatility index, I wonder if I can find it here, VIX. X. Oh, I can. Good. The VIX index is right now at, no, that's not right. Let's try it again. VIX. The VIX. Ah, there it is. Okay. The volatility index is trading at 12.17. It made a lower low today. I mean, can you believe it? The market is not making all-time highs in the indexes, yet the volatility index is. So I wanted to talk about emotion. Imagine the emotion. Imagine the difference between yesterday. Imagine if you were a bull yesterday and you decided, you know what, this is just horrible. We're making lower lows and lower highs. I'm going to go bearish. And towards the end of the day, you implement short positions. What are you feeling today? It's the exact opposite. Dow's up 143. S&P's up now 11. Actually, that's interesting. The S&P should be up 15 or 16 with the Dow up 140. So the Dow is actually ahead of the S&P. What about the USO? Do you remember during the last administration, whenever crude oil was up in the newspaper headline said, oil hitting highs, oil hitting highs. Has anybody even seen anything about oil up at these levels right now? Let me just look at the monthly USO. We take a weekly. Go to the weekly, up there, down there. Weekly. Look at this. It is almost back to the 39.50 level of September of last year. It's trading at 37.94. This is leg A, B, leg C. It should still go higher. Isn't that interesting? Now, will much higher crude oil impact the XAL? I wonder if I can, yep, there it is. Let's look at the XAL index. No, XAL is up 83 cents at 103. What is the XAL? It is the Amex Airline Index. Isn't that interesting? So I don't think at this particular point the bull market is done. I do anticipate that this corrective process is ongoing. I'd like to look at a stock like SHW, which is a Schwab. Look at that, way off the recent high in the 29 area. It's at 25.27. So 4 points, that's 16, 17% pullback. Trying to get to support here. Got to watch these things, and this is telling me, I love to watch the stock. I don't watch it often enough, but I like to look at it. Why? Because it's telling us about the lay public. Let's have a look at Morgan Stanley. A little different. This is not quite the lay public. Yep, that's just stuck right now. It's up 29 cents, and it's at $30 round number. This is a very selective move, and I didn't know which stocks to get, so we bought an ETF that is trading at 62.38. That is the 300% long. We bought a smallish position. It comes to the same sort of thing because smallish position of a 300%er, 1/3 position, says that at least I wanted to trade this, and I've raised the stop so that, if we get taken out, we get taken out with a bit of profit unless it gaps down huge tomorrow. But I don't know how else to play it. If I stepped on the sidelines, being in cash is fine. I don't think there's an issue with being in cash. But if I stepped to the sidelines, I would have been really upset because I had all these indicators. I had no choice. Even though we bought a gap up, which is something, oh man, on a 300% inverse or a 300% ETF, that's taking a real gamble because it could just drop in a split second. I had a very tight stop. So I'm thinking that this is still just the start of a move to the upside. We had a volume. It wasn't a volume spike. Actually, I'd like to check that right here. No, volume miss. I thought there'd be a climax volume to the low on the downside in the weekly chart from 6 weeks ago, but there wasn't. All right. So this is a fascinating day. And I'll be right back. Basil Chapman, Tiger Conditions, our 877-927-6648. Love to hear from you. Euro is down just a tad. Dow's up 140.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, the Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzavento, Andy Hecht, Victor Jones, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. Keeping in mind that the charts that you're looking at were yesterday's charts. They're not updated at all. I've got other charts all around me that are updating beautifully. I just, I need today just to not be using this particular platform. The IYT, which is the iShares Dow Jones Transportation Average Index Fund, leg E up in the monthly, leg D in the weekly needs 141.70 to start leg D and get towards that resistance line that you can see. Remember how to use these trend lines? I love to teach these things. This is my particular methodology. I like to look for the price that is visually the most appealing to me. I usually go to the outer ends of the wicks, but if I need to use bodies, see the way I've used it here, where I'm using the tops of the bodies rather than the top of the wick there. It's a little detail if you're looking at Tiger TV. And let me just double check here. Let me go to that right there. Let me just see that I've got volume off. You never know. You don't want to have, yep, there's the volume up. Okay. And I've chosen, at first I would have had to have used this line right here, that peak A that turned into a peak A minus. But obviously when I got to that peak C right there, I needed to use it. But I used the body rather than the top. Why? I want to be a little bit more conservative. Does it make a difference if I raised it just a fraction to there? So that it doesn't. It makes a difference of maybe 15, 20 cents. It does, but that's what I like to do. The price point that's hit most, usually two, you have to have two. I would prefer 3 candles in a line that make the trend line to the upside or downside. And from that one, I will also once again try to be the most conservative. In this case, I took not the wicks of the bottom, I took the bodies. Why? Because I want to get there as soon as possible to at least have a warning. So that says the parameters to watch will be, if it's today, it'll be 142.15. Tomorrow, it'll be 142.25, 10 cents higher. And the bottom, it says the 9-period moving average at 139.79 today. It's probably a little higher. It's probably at about 139.83. Somewhere around there, and this trend line here of 139.87. So that's the way I like to use trend lines. And in this case, going 1 penny above at 141.70 would say we've got a leg D. Start getting a little bit cautious in the IYT. We don't have a position, but this is what I'm saying. And right now it's at 141.38, having gone a tad higher. So it hasn't made leg D yet today, and the day's young. We could still get a pullback. The Dow could pull back to a plus 80. We've seen that happen many times over the last week. Because why? We're in a period here of indecision, and in indecisive moves, fund managers are quicker, not quick, but quicker to take off something, and they are quicker to add to positions if things are right. Now, one of our Dennis, one of our really fabulous position players, not trader, but a position player, texted me to say that the fear and greed index was below 20 again yesterday at yesterday's close. To me, all these different things are signaling that there is still residual buying. But I'm also looking at this as if to say, be careful, because there is a form of distribution going on. If I'm looking at something like an SPG, let me just get rid of this, SPG, and then I'll show you SPG up to yesterday. This is one of the very biggest of the REITs. This is a mall, the Simon Property Group. Huge number of malls, probably one of the greatest owner of malls around. Has not yet gone to the 182.45 cup pattern, and that says to me that because we are looking at the U-shaped pattern that very often tries to test the previous high, I'm watching this very, very closely. Why? Because the weekly chart is in leg F. We have a potential 2-bar reversal at Chapman wave 2-bar reversal. 177.31 was the high of the week of the 15th, that's last week. And the week of the 23rd, that's this week, 177.16, 7 cents away. Is that right? 15 cents away. And it says that if next week SPG is even lower, if it starts to get under 174 and then goes under 173, and then by the end of next week it is under 170, I'd say it closes under 174 in the 173 area, that'll be a heads up to say that the IYR, I'll be back with this thought because it's just a thought right now, we don't have a trade in it, that the IYR could be coming in for a decline. I'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Andy Hecht has just announced a live 90-minute webinar that he'll be hosting Saturday, June 7th from 9:30 till 11 a.m. Eastern Time, entitled Energy Opportunities During the Summer of 2014. With the frigid winter having depleted some key energy stockpiles, Russian political tensions high, and the storm season for the Gulf setting up to reverberate through energy markets worldwide, opportunities could present themselves over the summer months that could provide huge payoffs. When you sign up, you'll gain immediate access to a 7-page report Andy has put together as an introduction to what he'll be covering, so you can start preparing and get a feel for what Andy will be discussing live during the workshop on Saturday, June 7th. Andy will be advising his attendees of at least one trading recommendation in each area, including crude oil, natural gas, coal, and refining spreads and oil products. The best part is that this live 90-minute webinar is only $99. Don't wait. Sign up today and reserve your spot while gaining instant access to Andy's 7-page report right now. For all the details, visit the front page of TFNN.com. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Folks, we're back. Gee, I'm getting a lot of information here. RealTrack recently said 43% purchases on residential was with cash. The report also shows that 42.7% of all U.S. residential property sales in the first quarter were all cash purchases, up from 37.8% in the previous quarter and up from 19.1% in the first quarter of 2013 to the highest level since RealTrack began tracking all cash purchases in the first quarter of 2011. This is the IYR, U.S. Real Estate Index Fund. Looks to me like two patterns. I could either, let me just do this here, go back. So the current price is at 70.76. It seems to me that I could quite easily, I drew this in a little while back for my subscribers. In fact, I drew it in right here, I think it was. So the dashed line has been resistance and the dashed line has been support. I could, in fact, put an oval pattern in, but my eye says that the stochastic is at 76% flattening out, not confirming the rallies, and that the MACD today, the day's young, but so far today, the MACD has crossed negative. I'm going to be watching this real closely. That's the REITs, that's the commercial REITs. What if I go to Lennar, Lennar Core, A-Shares, Home Builder, trading at 38.02, down 32 cents, having made a peak D. Let me put my down arrow. Let me put my up arrow. I can always go back and do this, remember. It's not a big deal in the Chapman wave. You always wanted to look. You always want to be as correct as possible on your last wave count, because it's the waveform that never sleeps, and every single peak and trough is counted. And certainly when you get to D, if all the signs are there, you want to put a down arrow, which I should do here because the MACD is crossed negative and the stochastic's way down at 30%. But look at the weekly chart, peak D, and every rally has just this little bit of leeway, about a 2-point rally, then plop down to a lower low, 2-point rally, plop, we'll see if it goes to a lower low. And look at the double top, that U formation in the monthly chart. I don't know what to tell you. It's just it's got the look. This chart has the look of time, if not price, to the downside. 44.40 was the all-time high. 44.40 was the last high. The all-time high is at 68.86. Now, a couple of things are going on in Lennar. If Lennar takes out 36 support, there is a chance that it could go down further. It could even test here, I don't know, 30.90? 8 points from here. Let's do one step at a time. So far, there's nothing really wrong with the chart. It's just a consolidation in the monthly. The weekly chart has held quite nicely, but absolutely, if it takes out 37.32, the low of the week of the 25th of April, then that low of January at 36.41, that becomes a target. So we'll go one step at a time. Upside surprise. Upside surprise is the candle of last week makes the high of 40.44 very tough to get get through. If at any point, say next week, Lennar closes about 38.92, the 9-period moving average, let's call it 39, then there's a good chance it could test the high. Look at Toll Brothers, another one of the very best of the home builders. I can't get there because something happened, so that's going to be out of the question. All right, Lennar was the last one I did. But what I wanted to show you was that in the monthly chart, I'm going to open this up real nice, of IYR, the all-time high of 94.99 with a 90 round number opening, this is a monthly chart, dropping to 20.98. That is one whopping decline. 66 or something percent decline. And then a rally back to 76.21 is really impressive. That's a beautiful increase. And now the IYR is at a point where it says, I'm struggling. And the question was, is that a right arm failure pattern? So here's the answer. In the Chapman wave methodology, what we look for are signs, especially at a peak B, A or a B, for a rollover, and that can only occur in a smaller time frame. So when you look at the weekly chart, weekly chart stochastics at 94%, that's very strong. The MACD is still very good. So I have to consider that it's just a high-level consolidation, and until 69.70 is the 9-period moving average, unless the weekly chart closes below 69, I just have to consider that it's a peak E. It's met every single target we wanted, left side, right side, price time match. The Chapman wave inside track dash line target level. It's gone to an E. Almost certainly in May it will make a peak E if the high is 71.73. So that's not too far away. It's only less than 2 points. But if this week the IYR is not able to test the 71.30 area, I'm not sure how it's going to get to 71.74 to extend leg E to the upside. So this says rectangle formation, at least for now. Maybe it will make another handle shape pattern if that's this E is a top. But at ease, you have to be careful. But I don't have any sign technically, so I have to go to the daily chart, and the IYR daily chart is the only thing that says, so far, the formation of the different patterns that I have studied and shown have all been met. The inside track, that green line to the red line, has held. that until the IYR breaks under 70.74, it's about 50 cents or lower, I can't really consider that it's a failure pattern. And even then, it's going to really take out the low of 70.98, the low of the 15th of May. Has to take it out to say that was an H pattern, a right shoulder failure pattern in the daily, and that pattern could very well turn into the pattern that we're looking at in the monthly, but I'm just going one step at a time, and all I can say is the pattern's saying that if there is a sudden failure next week, then we've got to consider somewhere in the, I'd put it late May, early June period, the level of 69.71 will be tested, and that's the low of the bar, the candle of the 5th of May. So I wanted to go through that because I don't often get a chance to look at what has been very favorable sectors that I've really liked, even though we might not have had a position, but that are now changing their stripes and becoming negative, at least in the short term. And let's look at the XLF today. It's very important. XLF, oh, I haven't got it. So I should have, well, all right, I don't have it. IYR, I'll go back to, just to have a chart there, and I'll pull this one up here, right here. Click XLF, trading right now at 21.86. Ah, boy, just in a trading band. The moment it breaks 21.50, if the XLF closes under 21.50, look out for a test below to the 21.20 area. And if for any reason it's able in the next 2 days to push towards, it's a 21, right now it's at 21.86, up 13 cents. That's really pathetic. It should be much higher. It was higher earlier this morning. I'm not that happy with the chart formation, and certainly in the weekly formation. Let me go to that, and I'll show you something very interesting. Look, weekly, right there. Look at this. From the low back in June, it went A, B, C, D, E. So at peak E, D or E, you can expect a pullback of time. There is a pullback of time. And now look what we're looking at. We're looking at a triangle formation. Look at that. I've drawn it nicely in the XLF on my charts, but I haven't got my charts right now. I don't know if I can draw here. Imagine I took that line and all I did is I joined the lows. That would be about a 45-degree angle, probably a little bit more than a 45. Let's call it 45 for now. And on the way down, it's also about a 45 degrees, so it's a symmetric triangle. And, oh, I forgot to answer someone about a certain stock. Maybe I'll do it now. And if it breaks above, it means that it could push towards the highs of the 22.25 to 22.50 area. And if it pulls back under it, underneath 21.50, so it's probably going to test the 21.20s. WWE, I believe that's the chart. I'm so sorry I didn't give you a chance. I didn't answer you. I meant to do it, and I forgot. I hope you're listening now. The questioner, my subscriber. Yeah, so I don't have any position in this at all at this particular time. This is World Wrestling Entertainment. Used to be Worldwide Wrestling. I think WWW. Now it's WWE. I love saying that. WWE. And, you know, it took me years. It was maybe only about 4 or 5 years ago when I was saying it. I'm real slow when it comes to some things. It clicked that a W is a double U. The letter U. God, can you believe it took so long to figure that one out? Anyway, WWE is trading right now at down 10 cents at 10.83. Now, I should have got to it because what I was going to say that in a cascade to the downside like this, almost an A to B equals C to D. In fact, it probably is that. I don't want to measure it right now. If the bar that follows the smash to the downside, which is today's candle, wait, this is a weekly candle. Let me go to the daily. That was the one that I really wanted to look at. Daily. Yes. The bar that takes the smash to the downside, if that continues to fail, you have to expand. That was that bar from the Monday the 7th of April. Is that when it happened? All right. If it continues lower, that's usually a very negative sign. But in the patterns that I'm looking at now, and I believe this this person went along, I just don't have the email in front of me now, I was going to say that it's really important that it takes out the left side high, in this case of 20.86, that was the candle of the 1st of May, and holds above. Because if it does that, it has a real good chance to get into that candle, which means that it has to clear 23.19. These are big steps. It's another 3 points to the upside. So what I was going to say, and I hope you're listening, is that as you've got this climb to the upside, I don't have my 120-minute chart now. Maybe, do they have that here? 2 hour. Let's just do that. 2 hour. Yes, I do. So that's A, B, C, D, E. This is F. What I wanted to say is I'd done a little work, and then I just completely forgot with all these things going on, to mention that I'd be a little bit careful. I would start to take some money off on any gap to the upside or push to the upside today. Keep your core position because you're down. You bought it at a much lower price. I would keep that position, but I would start to whittle away. I'm not sure I want to hold that position for a big move to the upside. I'm not sure it's going to happen. But if you just take off a little bit on each rally, you will then have a core, say, 1/3 position. And if that keeps climbing higher, fabulous. Then you're making money with the least risk possible. So what I'm going to suggest is it's trading at 20, what is it trading at right now? Down 10 cents. It's trading at, open, loss is 19.92. If it can get back into the 20.10 area this morning, today, I'm not sure it can, but if it can, I'd be taking a little bit off. In fact, I'd take a little bit off right now. And if it broke above today's high, I would raise my stop. I'd make it a 25 cent, maybe 30 cent stop on the position. If it can go above 20.65, make 20.35 the stop on one of your positions, especially if we close there. And if by the end of the day it's still doing well and it gaps up tomorrow, you've got your 2/3 position. I start to look to maybe take off another third, and then I just keep the rest. You might even want to add back a third if it's acting very well and it just pulls back briefly and starts to stabilize. So that's WWE. Let's go to Travis in St. Louis. Hi, Travis. How are you?
Doing great. Good morning.
Good morning.
It's almost afternoon for you, I guess, though, right?
No. We've got 10 minutes, a full 10 minutes
10
to go
minutes.
before 13 minutes before it's afternoon.
Hey, real quickly, I don't want to take too much of your time because I know your show is coming to an end. I'm actually pretty negative on the market right now, and I'm actually building short positions, but you're actually keeping me, and I respect your opinion so much that your opinion is actually keeping me from getting more short. And so I just wanted to kind of make sure I'm on the same page with what you're thinking. It sounds to me like you're still a little bit biased to the upside, at least in the short term. Is that right?
Okay, that's a great question because this is exactly the next segment was the segment I was going to do as a wrap. Let me explain what I'm looking at. Because there was such a devastating blow to the momentum stocks, and we've got a break coming up right now. The momentum stocks, let me just check quickly on the IBB. Yeah, and I wanted to see if the IBB was going to participate. If it's just the momentum stocks, then we have to be a bit careful here. And let me give you a scenario without the rush, the pressure of a break coming up. Folks, a break coming up. I'll be right back with...
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foresight Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Hi, folks. We're back. We're back with Travis in St. Louis. And I've just got here the XIV, which is this is the inverse velocity shares daily inverse VIX short-term ETN. And what I'm looking at here is the chance that it's in leg F in the daily, and the weekly is the one that I needed to look at to determine by the end of the week whether or not the MACD and stochastic are verifying the rally. So this is going to be very interesting. So let me just give you a summation of what I'm thinking. It's kind of complex, and that's sitting at the back of my mind. A lot of things are running, wheels are spinning. Let me see if I can articulate it into words instead of images. My impression is that my Dow Quartet are acting very poorly, and that says that the holding of the Dow short position is going to be under duress, but I'm watching real closely to see how the Dow acts and reacts by the end of the day together with the other indices, because, as you know, in my weekly charts, there is a possibility, especially with the New York Stock Exchange, that there could be one more modest, just a modest pop to the upside to make another leg. That's my thinking. So in the back of my mind, I'm saying, wait a minute, what are the levels? And yesterday I said 16,380 to 16,350, which became the exact area of support for the Dow. If the Dow really cracks that decisively, it goes under 16,300 in the next couple of days, that's going to say lower lows, lower highs. And the rotational correction has already begun in the sense that some of the momentum stocks, which is the reason why I wanted to wait for the QQQ series to see if they can get to leg D, because if it's just a fractional D, I do not like those. Fractional A, fractional B, and it takes time, and then a modest C, and yesterday it was almost like a C1, C2, except today we managed to squeak to a higher high in the QQQ series of a high of 88.68. If that starts to fail by the end of the day, and the Fed minutes are coming out, I think at 2 o'clock or something like that, whatever happens, if there's a failure pattern, that's when I would say now you can start to add to the short side, because we've had a test of strength. Strength hasn't held. Right now it has to be thought of as counter-trend strength, and that's the reason why I want to look at the IBB, because the IBB, if they are acting very well, the biotechs, that's different. Now you'd have momentum stocks like an Amazon, like the ones I've looked at, Google, and if you've got them all together, that's really going to power both the S&P and the NASDAQ. At this particular rate, all I'm looking at is that the momentum stocks that have been beaten down have had a really nice rally. If the rally starts to fizzle, then we'll be under duress, and that's going to be this containment area. Looking out in the big picture, a Dow close under 16,000 will be very negative, and a rally to a modest new high is something that is a possibility, but a rally to Dow 16,900s in May says, don't be fooled. There's still internal strength, and we could still go higher. So I have my levels set out. I have the different indexes set out. As you know, in my opening call, we've raised our largest cash position in quite a while. We still have a couple of shorts, and we've got this long that seems to be working right now. Let's see if it's still working by the end of the day into tomorrow. But when that fizzles, when the QQQ series, like the IWM right now, is trading very poorly, very, very poorly. So this is not the time to be bravura on the upside. It's not a time to be yet on the short side, but I think you can place your positions with tight stops, see where it goes. So
that makes sense.
Okay, so I hope that wraps it up there for you. Thank you very much for calling. As Travis is saying, stay tuned, folks. Larry is back. Thrilled to hear him speaking again about the market. We'll be back. I'll be back tomorrow. Have a great day. Check my opening call out. Very interesting newsletter. I'll be back tomorrow.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This is TFNN.